It's so clear that the West is going down and the sun is rising in the East. Everybody can see it. And of course, the East or the China are not short-term planners either. They plan for 100 years. The US plans for the next 10 minutes, sometimes for the next hour, or maybe sometimes for a few weeks or a month. And as we know, the president changes his mind 100 times a day. Therefore, it's very easy for China with a long-term vision to overtake the US and be what they deserve to be at this point, the number one economy in the world. And it's impressive what they achieve in all areas of especially industry, of course.
Global macroeconomic dominance is decisively shifting away from the West toward the East. While Western governments remain trapped in reactive short-term political cycles, Eastern powers are executing long-range industrial and economic strategies. Egon von Greyerz, founder of Matterhorn Asset Management and an internationally recognized wealth preservation specialist, warns that this geopolitical realignment will trigger unprecedented market disruption. He predicts a devastating collapse across overleveraged Western artificial intelligence stocks, where massive corporate debt and absent earnings will buckle under low-cost Eastern competition. Furthermore, he forecasts that the autumn market downturn will evolve into a decade-long secular decline, permanently establishing China as the world's primary economic superpower while the dollar-based debt architecture disintegrates. Central bank fiat currencies will ultimately lose all purchasing power over the next few years as governments accelerate money printing to paper over structural insolvencies. Now, we present the clips from Egon's interview. Before we continue to discuss this, please hit the like button, subscribe to the channel, and ring the bell icon. Thank you, and enjoy the video.
We know that deficits in the US are currently increasing by $2 trillion a year, and that's going to accelerate. It will accelerate with higher inflation. It will accelerate with much higher interest rates. I said already in 21, interest rates have now turned up in the US, which means also up in the world, together with inflation. And that will create massive problems for the US government to finance the escalating debt. And we're talking about here, I think, remember that we haven't seen the crisis start yet. When the crisis starts, you will have, just take the financial markets, you will have problems in the banking system that will be massive. And there'll be an aid necessary to major parts of the banking system for it not to collapse. And the US debt of 40 trillion will, and the interest cost on that, which is today about $1 trillion a year, will increase dramatically. Because I think interest rates will go up to, like I saw them in the 1970s, they will go up to high teens at least, maybe 20%, maybe even higher. And no borrower will be able to service the debts at that level. And the only way that will be possible, whether it's for governments or for private borrowers, is to borrow more money. So it will become a vicious circle, a spiral of higher debts, higher interest costs, higher deficits. And that's what always happens at the end of a monetary era. And it will be disastrous for the world, of course. And the consequences will be a collapsing stock market, a collapsing bond market, and an extremely depressed economy, potentially, obviously, recession, potentially depression also. And that will lead to social unrest and real problems, and governments will come and go. Like they are doing already. Leaders will come and go. I forecast that a long time ago, and we're seeing it in most countries. Either we know that the leaders are on the way out, some are out already, some are on their way. It will be a very difficult, both economic situation in many countries, in most countries, and a difficult social situation. Add to that two wars which are merging into one now in Ukraine and in the Middle East. And, wars are always part of the end of an era also. Governments start wars in order to be able to raise more money and blame the war. And so those wars can escalate. And we're in for a very, very difficult times in the world. So protection is, of course, everything here to the extent that people can. But then, of course, as we have said many times, we're saying again today, hold some physical gold, hold it outside the banking system. It's not going to protect you from all the problems we've outlined, but it certainly is good to have some reserves. China has a debt problem also, but the difference between all other countries is that they're not dependent on outside money to the same extent as the Western world is. So therefore, they will solve these problems internally. So therefore, although they will suffer like everybody else in coming years, they will manage it and come out better and stronger than the West. And after this crisis has ended, China will definitely be the leading economy in the world. And the US will have had real problems and their economy will never be the same again because it was dependent on a dollar debt system that was unsustainable. Therefore, it's so clear that the West is going down and the sun is rising in the East. Everybody can see it. And of course, the East or the China are not short-term planners either. They plan for 100 years. The US plans for the next 10 minutes, sometimes for the next hour, or maybe sometimes for a few weeks or a month. And as we know, the president changes his mind 100 times a day. So therefore, it's very easy for China with the long-term vision to overtake the US and be what they deserve to be at this point, the number one economy in the world. And it's impressive what they achieve in all areas of especially industry, of course. And you take their AI, it costs an absolute fraction of the US AI. And the valuation of the US AI stocks, are they're ridiculous, of course, because they are based on no profit and massive debt. Whilst China can produce the same thing for a fraction of what the US spends. So we'll see the whole of the AI sector collapse in the US. I'm talking about the stocks. Of course, AI, just like the internet in the 2000s, will continue to thrive and be a dominant industry. But the financing of it and the valuation of it will come down dramatically, and a lot of companies will go under in that phase. And China will take an even bigger part of that market because they are superior in that area also. So it's a fascinating world. That you will see more of it in the coming decades than I will, but I've certainly seen a very interesting beginning of it, and it's been great fun to observe.
Annual sovereign deficits are expanding by over $2 trillion, accelerating an unmanageable debt spiral across the entire Western financial architecture. As interest burdens escalate toward historical extremes, neither national governments nor private corporations can service existing obligations without continually borrowing larger sums to stay afloat. This structural insolvency fuels a destructive loop of surging interest costs, widening budget deficits, and mounting defaults. This severe liquidity squeeze creates immense vulnerabilities across commercial banking networks, making emergency state bailouts essential to prevent widespread collapse. Concurrently, expanding geopolitical conflicts drain public treasuries while serving as political justification for unchecked monetary debasement. As the real economy faces deep stagflation, mounting social friction and public discontent will inevitably cause governing administrations and political leaders to be replaced in rapid succession. Now, let's get back to the interview.
Over 25 years ago, and of course, we've seen a rise of around 15 times depending on the currencies. And that's sadly just the beginning, because the governments now are going to do everything they can to destroy the value of paper money, as always happens at the end of an era. And that's what we're going to go through now. And as you rightly say, it's getting closer. These things often take longer than we expect, and they have done. But nevertheless, the risk is there. It's always been there. It's higher than ever now. And I think we are going to, the stock market needs to crash or come down severely before people start understanding what's going to happen. And I think this coming autumn, we will see the stock market declining, but that's going to be a long decline. It could be a decade long or so, and it could start with a crash, or it could start slowly. And nevertheless, the risk is there now, and this is the time to protect yourself. Virtually every president, when he starts his reign, says he's going to go and check the gold in Fort Knox, and they go there and have a quick look for 5 minutes, and they say, well, the gold is there, and they have no idea how much gold is there, and if it's real gold or tungsten, which is fake gold. We both doubt that the US has got its 8 tons of gold in the vaults. I think most of it has been leased to the market and to keep prices low. But that will come out one day. Trump did the same. Went to Fort Knox also, first time, I think, his first round. And same conclusion, the gold is there. You don't expect anything else from government or officials. So the gold isn't there, in my view. It's been disappearing gradually over the years by basically the central banks lending to the market. Then the gold that they lend through bullion banks in New York or London goes to, that's 400-ounce bars, goes to Switzerland to be broken down into kilo bars, because that's what the bullion banks do. And then they sell them where the demand is, which is mainly in the Far East. It's China, of course, primarily, India also. And they all want kilo bars. And we have the statistics, how the gold is going from, for example, the US to Switzerland, and then on to the Far East, China and India, etc. I would expect that the gold is not there to the extent of 8,000 tons, and probably a lot less. We will see one day, but not yet. There hasn't been an audit, as we know, since Eisenhower's days. A physical audit has not taken place of all of the gold holdings since Eisenhower's days in the mid-1950s. You see, Norway sold all their gold, all their government-owned gold, for, I think it was longer, 30, 40 years ago. I think it was. Or it was certainly in the 90s, I think, the latest bit that they sold. So they have no gold. And now he's talking about the whole of the Norwegian sovereign wealth fund possibly collapsing. So why isn't he taking measures? And that's typical. He's crying wolf, but he's not taking any action to protect himself. Of course, he's an employee. He has got no skin in the game. He gets a massive bonus this year, and so he'll be happy. And I wouldn't be surprised if he doesn't buy gold himself. And he would be stupid if he didn't. But maybe he is stupid. I don't think he can be that stupid, since he's clearly made a lot of money, and especially on US tech stocks. So it's an interesting situation. He sees it coming, but he does nothing about it to protect the Norwegian people. Very sad, very, very sad. And that's typical for the whole of the world. People in leading positions, they don't understand the risk, and they don't understand how to protect themselves. And it's so simple, especially with the debt situation we have now, that we know that the fiat money is going to go to zero before this era is over, and that's going to be in the next few years. And gold is just the simplest way of protecting that risk. But very few people do it, and certainly very few sovereign wealth funds do it.
National reserves are facing unprecedented scrutiny as unbacked paper replaces sound monetary foundations. Official stockpiles, such as the 8,000 tons allegedly held in Fort Knox, have gone without an independent physical audit since the Eisenhower administration in the 1950s. Decades of central bank leasing have quietly depleted Western vaults, routing traditional 400-ounce gold bars through Swiss refineries to be converted into kilobars for high-demand Eastern markets across China and India. Meanwhile, major sovereign institutions, including the Norwegian Sovereign Wealth Fund, completely liquidated their government-owned bullion, leaving public wealth dangerously exposed to broad financial contagion. Institutional managers and political leaders consistently miscalculate counterparty risk, failing to implement basic defensive measures for their citizens. Allocating wealth into physical gold, stored strictly outside the vulnerable commercial banking grid, remains the single most effective hedge against institutional insolvency, escalating warfare, and currency debasement. When debt-based monetary systems reach terminal exhaustion, tangible precious metals ensure absolute wealth preservation across generations. Share your thoughts about this interview in the comment section below. If you found this video helpful, please hit the like button, subscribe to the channel, and ring the bell icon. Thanks for watching.